this is going to be a new segment that I'm going to do every week called Hit and Miss. Stocks that either hit or miss earnings. So let's get to that story. Here are my hit and miss stocks. We're going to start with Enphase. How many of you out there own Enphase? Oh, guess what? I can't see you. Haha. Anyway, if you own Enphase, you're happy. Enphase beat earnings yesterday. Enphase Energy EPS beats by 6 cents, beats on revenue. If you own Enphase, you are a happy individual. So they beat earnings, they beat revenue. Man, what more can you say about it? Enphase is a rocking and rolling stock. Let's go to another stock, Groupon. Groupon missed earnings. They missed by 8 cents and they missed on revenue. All right, so that was a miss. Enphase was a hit. Groupon was a miss. Herbalife up 5% after hours on Q4 beat. So they beat earnings. Sales 1.2, that's a big number, up 2.8%. Income, everything is up on Herbalife. So Herbalife was a hit. And last but not least, let's look at Walmart. Walmart, interesting, they rallied right past a rare profit miss. Walmart tends to not miss earnings, but they did. And because they did, doesn't matter. People are still feeling good about Walmart. Walmart rallies past its rare profit miss. So we had 2 hits. We had 2 misses. Let's go to the watch list. We'll go look at Enphase was a hit. Walmart was a miss. Herbalife was a hit. And Groupon was a miss. Let's analyze them. Right now, Enphase, as beautiful as that graph looked, the stock is currently overvalued. Remember I told you that just because the stock is overvalued doesn't make it a bad stock. All right, before I look at the graphs on these, I'm going to show you something a little different that we don't always talk about here. On Enphase, as we're analyzing the stock, I want to show you that you can right-click on the stock and you can get a full-blown stock analysis report on any stock. As I pull this over, this tells you a lot about the stock, where it's trading at, its stock graph over the last 3 months, the industry graph over the last 3 months. You know why? Because a stock that tends to go up, birds of a feather flock together. So the industry has been kind of jagged, even though the stock, this tells me that Enphase is a leader within the industry. Because even though the industry has been jagged, Enphase has been solid. Scroll down a little bit more, you can get a better definition on all of the different indicators within the software. Remember, I'm talking to you about value. Value is computed from a forecasted earnings per share, forecasted earnings growth, and profitability, interest, and inflation. So as I explain to you what we feel value is what we feel the stock is worth, we give you more of a definition of that in here as well. You can scroll down, you can get a definition on every indicator that we analyze stocks with. So it's not something that we do all the time, but I wanted to let you know that you can do that. And if you look down below, there is a link. Joey's going to put a link up there for you to get a free stock analysis on any stock that you're interested in. Because today, I won't be able to do a quick fire of your stocks. But if you want to get an analysis on your own individual stocks, Joey will provide you with a link that you can get a full-blown stock analysis report today. All right? I'm going to close out of that. And now let's go back to ENPH. Let's go back to Walmart, Herbalife, and Groupon. So Enphase, over its value, remember, it doesn't make it a bad stock. It just means that people are willing to pay a premium to own it. Upside potential, really there. This is a stock that you don't want to mind holding for the long period. Relative safety above 1. Well, the stock beat earnings, right? Normally when RS is above 1, a stock will tend to meet or exceed its earnings expectations. And RT at 2.00, the stock is moving as fast as it possibly can. And look at this. They grow their earnings at a rate of 48%, and that CI tells me that the stock goes up more than it goes down. Walmart missed, right? The stock is over its value. Look at that. Upside potential is there. Walmart may not be a stock that you might not. Walmart may be a stock that you won't mind owning for the long term. The safety is there. The stock will tend to meet or exceed earnings. Notice the story said that this was a rare earnings miss. That relative safety is above 1 to tell you that most likely this stock will meet or exceed earnings. Relative timing above 1. The stock's in an uptrend, not screaming up, but in an uptrend, and they do grow their earnings at a rate of about 9% a year. This stock does go up more than it goes down because that comfort index or CI is above the value of 1. Herbalife, they did go and blow through earnings, which was great. This stock is undervalued. Upside potential. Herbalife may be a stock that I don't mind owning long term. Relative safety is not above 1, so it may or may not hit or beat earnings, but the stock is a good long-term play. What I don't like about it, it is a sell recommendation. The stock is not in an uptrend right now, even though the story just hit yesterday. They beat earnings, upside potential. The short-term price trend is not there. They are growing their earnings at a clip of 12%. So a couple of things about Herbalife. This is a stock, I would call this more of a value stock, a stock that I wouldn't mind holding. Does it pay a dividend? No dividend. So, man, this is interesting, a stock. RT is below 1. Be careful with that. Even though it beat earnings, the stock is not in an uptrend yet. Let's go to Groupon, who missed. They are undervalued, okay? Upside potential, pretty flat. Relative safety below 1. And the stock is not in an uptrend. Groupon is probably not a stock that you want to hold on to. Long term, it is a sell recommendation. The stock has negative earnings growth rate. Altogether, not a good stock. Let's right click on the stock. Let's go view the stock graph. Let's pull this over. Enphase. There's nothing, I can't say enough good thing about Enphase. Let's put earnings on. Where's my earnings play? It just hit earnings. There it is. There's my earnings play. Let's go put this onto Dateline. There it is. Put this on a 3-month graph. It beat earnings, and look at that stock's price rock and roll. Big, beautiful volume. And what we were talking about yesterday in the software, just in case you were concerned about it meeting or exceeding earnings, yesterday was a good time to put on a covered call or buy puts just as protection. But the stock gapped up, and look at that. Nice stock that beat earnings and nice up day today. Next one, Walmart. Walmart missed earnings, all right? Walmart missed earnings, and they are feeling the effect. But notice that the 3 and the 8 are still in place. Just leave it alone. Let the 3 and the 8 manage the trade. One day is not one day doesn't make a trend. But you do know that they did miss earnings. Just keep that in mind. Earnings per share is higher than it was 3 months ago. Volume is pretty steady, and right around that level of average volume as well. Let's go to the next one. Herbalife beat out. You know what this is? That's a green candle, and it's solid. That means the price started at the top of the candle and pulled back. Notice that the 3 and the 8 are bearish. So even though the stock beat earnings yesterday, all right, know what this is? This is a lot of profit taking. Look at the big wick at the top, which stopped right at that level of resistance at 42.74. That's a lot of profit taking on Herbalife. The stock yesterday closed at 38.95. It went up to a high of 42.67. A lot of profit taking. As overall, though, look at the stock is in a downtrend. Even though it beat earnings, be careful with Herbalife. And the last one is just Groupon. Woo! Groupon missed. I'm not touching that. You know, this is like MC Hammer. Do. Don't touch that. All right? That's funny, Joey, wasn't it? Mm-hmm. Joey didn't like it. He's got no musical acumen. That's why. Anyway, stocks price. Who's that? Lil Pop? Pop Smoke? Pop Smoke. All right. Anyway, so I shot him out. That's all I'm going to do. All right. The 3 and the 8 crossed to the negative side. And still is, man, Groupon is just not a stock that you probably want to touch right now. Big down day, big gap down after the earnings missed. And look at that big volume. A lot of people are selling out on that stock. Stock got to be a sell recommendation today. All right. So I took a little extra time this week to analyze the individual stocks that are in the watch list, specifically for the purposes of because I won't be looking at your individual stocks this week. So I wanted to put more emphasis on the power behind the software. For any of you who are brand new, folks, this is the power of the software. We can analyze any of your stocks to give you a better understanding on what you should or should not do with the stocks that you either own or are interested in. And if you like what you saw today, folks, don't forget to comment, like, and subscribe. Subscribe. We're trying to get up to 10,000 subscribers. You guys can help me to do that. You really can. And don't forget to comment, because the comment lets me know that you either like what you saw. If you don't like what you saw, let me know that too. And then whatever you want to see, let us know that too. So with all of that being said, folks, I want to say thank you for joining us today, even though this was a recording. But hopefully Joey was in the background answering your questions. I know he was. And I know you guys the whole time were talking amongst yourselves as well. So keep up what you do. Keep coming out. New people, I hope to see you again. Please come back. Invite other people. And if you do, get them to subscribe. All right? With that, folks, adios, arrivederci, ciao. I'll see you next week once I return from Pensacola. And I got to do it again. What is it? Adios, arrivederci, ciao. Au revoir, sayonara. See you next week, folks. Later. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.